Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Paul Meijers, who is with us from Airbus today. Paul, can I ask you just briefly to introduce yourself? And I'm sure all our watchers know, but just tell them where Airbus sits in the aviation ecosphere.
Thank you, Joe. Yeah, so as you said, Paul Meijers. I'm heading the aircraft leasing, trading, and financing activity within Airbus. It sits within the commercial department, so it's geared to all the financing aspects, and it's customer-driven. That's why we're in commercial. But me and my team are here to support, all our customers when it comes from airline deliveries, on whether it's on financing, supporting financing, to all our leasing clients that have become obviously very important these days, whether it's as direct customers, lessors buying from us, or as financiers. And then I also covering all the used aircraft aspects, whenever we have trade-ins, distressed planes that we have to remarket. So this is all handled within my team, and we obviously work globally with all the business units in Airbus in all the geographies.
And Paul, can I ask you just generally maybe on the air travel and airline market, we've obviously come from a very distressed and fractured time over the last 21 months. How have you seen probably airline performance evolve over the last 12 months? And what is your outlook looking out into 2022?
Well, as we all know, the airlines have been so badly hit by, this very severe drop in their revenues and taking on significant debts on their balance sheets. And despite this, we are very favorably surprised how many airlines have weathered the crisis, have been managed to work with us, to fulfill their commitments on the backlog. Yes, we did reschedule and we did restructure nearly all of our purchase agreements with all our customers, and even, including lessors, many lessors. But, once we had an agreement and a way forward, the airlines have been performing very, very well to meet these renegotiated agreements. So we're very favorably impressed how airlines have behaved despite, the very, very severe difficulties they face on the operational side and on the business side.
Do you see that continuing on the positive trend line into 22? There'd be some concern that as airlines kind of return to operations, cash burn comes back, that we may have more distress ahead of us, despite the fact that air travel will continue to recover. What are your thoughts in that respect?
Yeah, I mean, we've always seen certain distress with airlines, bankruptcies, to call it, during good and bad times, and we've had our fair share in the recent months. But we're seeing a good recovery. I mean, the pent-up demands in terms of traffic when borders are reopening, or where there's a real airlines operating in the domestic markets, we're really seeing that. That demand comes back very, very quickly and drives, re-establishment of their revenue line. And we see that the airlines are very quick to readapt and bring back aircraft into service and look forward in terms of their fleet plans, their replacement of aircraft. And we see this, mainly it's been, the Americas, North and South, Europe, where we've seen a strong recovery in the summer. And the airlines very quickly pivot back into planning and replacing their fleet with more modern equipment. So we see a very, very fast recovery. We still obviously see that Asia is tough. China was holding up very well last year, but is now in a rather tough spot with traffic down 50% in domestic China as well. So we see that some difficulties still prevail in some markets, and that Asia Pacific as a whole is still hasn't recovered, but we hope to see that during the course of 2022.
You mentioned the leasing market there. There would be a perception that what the pandemic will give rise to is a real and meaningful shift in the percentage of leased aircraft. Very curious on your thoughts around that. One, what you've seen over the last 20 months or so? And two, if there has been a real increase, do you think that is sustainable when looking at the percentage of leased aircraft that are owned by lessors?
Yeah, and we've seen during the pandemic, as you said, Joe, a large percent of our deliveries were financed by leasing companies, but it was already the case pre-pandemic, where we saw, especially on the style aircraft, that more than 50% of our deliveries were financed by leasing companies. We saw that actually increase a little bit further during the last 2 years, last 18 months, 2 years. We think it's going to continue. We think lessors are going to continue to do the major share of our deliveries, and we even see that now on some of our wide-body deliveries. There's a lot of new capital that is flowing through the lessors. There's new players that are coming in, private equity-backed players that are entering the market and that want to develop their portfolios. So we see these new entrants, like we saw during the last financial crisis, that are establishing their portfolios, and therefore we see a lot of appetite for growth in the leasing markets, and we don't see that reducing over the course of next year. At least we see that continuing to develop.
And do you predominantly see that growth coming through lessors stepping in on the sale and leaseback front, or do you think you might see an expansion of lessors with significant forward orders?
I think it's the expansion, or the variable is more on the sale and leaseback. On the direct orders, typically we are seeing roughly 30% of our delivery stream on single aisle being allocated or committed by leasing companies. That may slightly increase over the next 2 years because some airlines have deferred more deliveries than the lessors. Therefore, you see a slight uptick in the percentage. But the largest variable is the sale and leaseback market, where you see that the activity there, and I think last year we saw around 40 lessors active in new aircraft sale and leasebacks, and we see that these are continuing to be very active and even more active than last year. So we probably see this year slightly higher percentage of sale and leasebacks compared to last year, and a stable direct order trend.
And with your Airbus hat on, how do you feel about that shift? So in looking at your customer, are you agnostic as to whether it's kind of airlines taking the aircraft or lessors through the sale and leaseback channel or placing a forward order? What are your thoughts behind what that impact has on your business?
Yeah, no, we always like to see a level of diversity of financing. I think it's healthy to see a wide variety of funding sources, whether it's export credits, insurance-backed structure, commercial debt, or leasing. So the diversity, I think, is healthy. That being said, it's been a trend for a number of years that leasing was developing as a more predominant way of financing aircraft for various reasons. The airlines have found it very attractive. We are also seeing that the diversity of lessors is growing. So you see that diversity now building up within the leasing community, diversity of sources of funding. So I think even though we're earmarked the aircraft as a financing via a lessor or a sale and leaseback, they are tapping into different funding markets, and so you still see that diversity and liquidity. So I do think it's a permanent shift, and although we're keeping an eye on the health of most of our lessors, and we monitor that very closely as one of our business risk factors, we welcome that, and we think it's not a major risk at this point in time.
And probably on the wider aviation debt market, how have you seen that develop post-COVID? We probably saw some traditional banks retrench a little bit. It seems as if, given the quantum of cash that's out there, that those markets are returning. We've seen some non-traditional lenders enter the space as well. What are your thoughts on where the aviation debt market currently sits?
Yeah, we were always very actively working with commercial banks on a number of customers and transactions, and we see clearly that during the pandemic, a lot of these banks, either some of them shut down, and sold their portfolios even. Some of them scaled back significantly, focused on key relationships. We did see them being far more selective than ever before. How quickly they will come back is a question, the usual traditional commercial banks. But that space, as you said, Joe, has been in some ways filled by new players that are coming in, and some of them being backed by private equity. And they are initially during the crisis, we felt they were pricing their deals rather high, and that therefore they would only take a small fraction of the market. That being said, over the last 12 months, we've seen their pricing improve and become more attractive. And so we see them widening in terms of their market penetration, and we feel they're here to stay because they're building up real platforms with management teams, and so we'll feel they're going to take a share of the business, and that they will retain at least for a number of years to come a position in the market.
And from your own perspective, looking at the demand for OEM financing, obviously production rates dip but are coming back strongly. We might come to those in a moment. Have you seen that increase in demand for OEM financing from your customers?
So, I mean, with all the liquidity out there, we had some challenging deliveries, but we have done very little in terms of on-balance sheet financing on our side. A handful of airplanes this year, where we participated. We didn't even finance the whole airplane. We provided some either junior debt participation or some minority participation in the financing to enable the delivery, but that was a very limited number of aircraft. We saw, unlike many previous crises which I've been through, this crisis is again very different from all the others. And the big variable here was the liquidity has remained very strong, especially since November of last year, and therefore we have not been called to step in and finance many of our deliveries, which is a good thing, because we were obviously ourselves with the reduction of production rates, as you mentioned, under pressure from the cash management point of view, and we wanted to preserve our cash. And therefore, we're keen to see external financing for our deliveries.
And on that production rate point, what are your thoughts on where you currently sit as we hopefully, I say clearly and hopefully, over the worst of this crisis, and we're seeing that demand come back? Production rates now, where do they sit, and where do you see those going for Airbus over the next kind of 12, 24 months?
So we are increasing production on all our programs, but in different, obviously in different measures. Single aisle is recovering extremely strongly. Now we've announced, that we will get back to 63 a month by the end of 23 on single aisle. We never stopped ramping up the 220. We paused it. Now we are restarting the ramp up on the 220 program. Also quite actively. We see very strong demand on the 220. We did a small adjustment to the wide body production rates. We made small adjustments on the 330neo from 2 to 3 a month, and from the 350 we're also making a small upward adjustment. So very small adjustment on wide bodies, because clearly that market isn't yet fully recovering, but the single aisle rates are really going up. We've had a lot of commercial activity on single aisles. We have strong demand going up to the end of the decade, but we are very constrained already in the middle of the decade in terms of availability of aircraft on single aisle. So we need to ramp up to meet the commitments that we've signed with customers. We don't build planes or plan production rates in anticipation of sales. We basically build our production rates on the basis of existing firm contractual commitments. And those are commitments where we have a customer paying the PDPs, being current on their contracts, and able to take delivery of aircraft. So it's very solid, I would say, a bottom-up approach, looking at each of our contracts and making sure that the airline is able to perform and take delivery of the aircraft, and our rates are fully benchmarked on the backlog that we have.
and the challenges you'll face in meeting those increasing commitments. What are you viewing as being the potential key impediments to keeping up with those planned production rates? And are any of those different to what they were 2 years ago?
Well, it's very different today because we are just getting out of a major crisis where we had a massive downwards adjustment to our industrial system, something that Airbus never experienced before. And that very quick uptick is positive, let's say, from a commercial and business perspective, but it's extremely challenging from basically a logistics perspective and basically replanning the restart, rehiring the people, getting the suppliers lined up to this quick turnaround in the single aisle production. Something that probably wasn't anticipated, 12, 18 months ago, that we would have such a strong pickup on the single aisle side. But clearly, it's industrially very challenging from not only our own internal resource allocation, but also from a supplier point of view. So that is a key objective for 2022, is to manage this ramp up very actively. Looking at all the factors that are at stake here to make sure we can basically execute on such a ramp up, and because that's what our customers expect. They expect their aircraft on time, and that's what we're working towards. But it is definitely a large challenge to see, after such a significant drop by 50% on wide bodies and 40% on the single aisle in terms of production rates, to re-ramp up that rapidly is not as easy as ramping down.
I can appreciate that. And you mentioned some around the metal and the demand, and it's clear the high-level answer to my next question is good narrow body new tech, bad wide body, right? But is there pieces that surprise you as you look at demand for metal and the type of aircraft and what either lessors or others are viewing as the best investable aircraft? What kind of trends are you seeing, probably a little bit wider than that kind of narrow body new tech wide body piece? Is there anything that surprised you around what aircraft have held up well or have held up less well from a value and demand perspective?
Well, yeah, it's a question you can spend a lot of time to discuss, because you can look at the different families, different aircraft types, new tech, prior technology. Clearly, to start with, we see extremely strong demand on our 321. Far, probably in a way surprising that it's more than what we anticipated. The drive on the 321 product. The 220 also is gaining a lot of very good traction. We're seeing, also that program doing very well. The 330neo, we had a lot of people questioning the program 2 years ago. Clearly, we strongly believe in the 330neo, and that program is going to be doing very well. We had a lot of campaigns. We had a few major campaigns, let's say, because that we won on the program, which were very positive news. We see the aircraft is excellent in terms of its performance capabilities, economics, and range. So at a attractive capital cost versus other wide bodies. So we see that aircraft having a very good position in the market. Now on the used aircraft or prior technology, we feel that A320ceos will come back very, very strongly as well. Let's just call them midlife aircraft, because of the shortage of new built new tech single aisle aircraft. There's going to be a long waiting period for new aircraft unless you go to a leasing company and lease aircraft next year or in 23 and 24, where there's availability still. You're going to have to turn to the next best thing. It's the 320ceo, probably the 737. Also, you will see pickup in lease rates on those aircraft, and I strongly believe that the wide body market, even on used aircraft, including the 330, will recover. Also, when we see a recovery in Southeast Asia. I think when Southeast Asia recovers, and borders reopen in that market, we will see a recovery in the demand for wide bodies in general, and including the used wide bodies. So we think those aircraft provide very good value at attractive lease rents, and that airlines will probably, opportunistically pick up on these opportunities with leasing companies in the market.
And the piece then also speaks to aircraft demand is just in the cargo space. So an area we've probably seen have volatility on flight levels over previous years, but e-commerce seems to have given what you'd expect to probably be a sustained change. How are you viewing cargo from an Airbus perspective for an opportunity side, and what demand are you seeing for fresh new cargo aircraft?
Well, as we know, cargo has rarely done as well as these days. The big question everybody asks is this a sustainable long-term trend that cargo is going to generate extremely good yields and margins for airlines? And a lot of airlines are operating today wide bodies with low passenger load factors but high cargo loads, and therefore can recover thanks to extremely good yields on the cargo, some of the lost revenues on the passenger side. Whether it's that sustainable, well, there probably will be some kind of dip when all the belly capacity recovers together with long haul travel. So we'll see it tapering off a little bit, but we do see a long-term trend that cargo is going to play a larger role in air transports. We see, it's only % of the global trade, so you just need that to grow to 1.5–2%. And it means, a lot of cargo aircraft. It translates immediately in a lot of cargo aircraft or a lot of required belly capacity on the passenger aircraft. So we see there with e-commerce, as you mentioned, Joe, an acceleration of air cargo. We are, in fact, as you know, launching a brand new A350 freighter. We're getting extremely good reception in the market for the aircraft. We launched it, obviously, without having a firm order lined up, which is unusual in our industry. So the aircraft is launched. We're taking orders. We announced a few. We have a few more in making. We think it's going to be a great success because it's a very capable aircraft with very good economics, and it's providing sustainable economics in many ways, and we have a freighter program, a P2F freighter program via EFW, in which we're a shareholder, that is also picking up nicely. They're expanding with new production lines, conversion lines. They had 2 before. They're going to have probably 4 to 5 in the coming 2–3 years. So really developing. I think there's going to be new customers announced on that. On the P2F side as well, which is going to help drive 330 market recovery as well. So we are very optimistic on cargo. It's not a space where we've been the most active OEM, as you know. We've left a little bit that space to our competitor, but I think we're back in the game now with a very good new build freighter and an attractive medium-sized freighter with a 330-200 and -300 that will be proving to be very attractive for some of the express carriers.
And the demand you're seeing for, be it the 350 or the other models you have, is that coming from operators? Is it coming from lessors? How are you seeing that break out from a demand perspective?
Yeah, it's the operators that drive it. I mean, lessors, they respond to operator demand, or obviously, so they invest into conversion slots or aircraft when they see that demand driven by some of their lessees, their customer base. So similarly, we see the 321 freighter is doing very well. Again, it's a constrained market because you have only so many conversion slots, and you need to find the feedstock as well. So, but those programs are all doing extremely well, and the lessors are investing because they see it not only because they see customers at the other end that are willing to pay a nice lease rent for an extended period, but it also extends the useful lives of their assets to 30–40 years sometimes. So from an investor point of view, it's also a very attractive market because of the extended useful lives of the aircraft, although you need to reinvest when it's a conversion. But those conversions today are fully justified by the kind of return rates that lessors can get in the market. So we see a lot more, lot more interest than pre-pandemic in those conversions, and there's going to be a lot of investments coming into that space, I think, over the next few years.
Yeah, no, I can fully understand that. And as you say, slots are golden at the moment, and there's a good fight to get your hands on them. Shifting gears, Paul, can I ask you if we move on to what will be the overarching topic that we are going to come back to again and again in the coming years, which is ESG and climate change. The sector, you could argue, is unfairly maligned, given the benefits it brings from a social and commercial perspective and the percentage it has, but it's there. You can't avoid it. The aircraft's in the sky, and it's something that people take a swing at. There are very ambitious emissions targets set. How realistic do you think those targets are in the first instance?
Realistic, yeah. This is a very loaded question, right? There's a lot of aspects to this, so it's. I think it's. Let me start to say it's very good to have very ambitious targets, because this is clearly a huge challenge for our industry, and we need to set ourselves ambitious targets, and that means we need a lot of disruptive technologies, because the usual improvements that you get every 10 years in terms of fuel burn on more modern new tech aircraft is helping. It's doing part of the job, but it's probably not enough. And those new ambitions for net zero in 2050 will drive not only the industry, but the ecosystem around our industry, because we need obviously the SAF, sustainable aviation fuels, to help. It's not doing everything. Today it's virtually inexistent or a very, very minor share. The planes are capable of flying on SAF, 50% today, 100% tomorrow, whether it's Airbus or Boeing. That's an easy change. The problem is the availability of SAF at an adequate cost. And to get there, you need basically to drive volumes to build up scale. And to build up scale, you need the airlines to commit to buy the SAF. So setting those targets will drive that whole dynamic of airlines, pushing airlines to find ways to commit to buy these sustainable fuels, drive the investment required in this space, which is very significant, obviously, and basically get the ball rolling, because 2050 seems far away. It's not in our industry. And in between, we should set ourselves goals by 2030 and 2035. Airbus has set itself an ambition for 2035 to fly a hydrogen aircraft. So that's, again, is extremely ambitious, because 2035 in our space, in a long cycle space, is very, very challenging. And it requires disruptive technologies, which today, we understand, but are not yet transferable into the air because of some of the laws of physics. So we have huge challenges to bring this together. But we see a lot of dynamic over the last year to drive sustainability. We are working also with our lessors, our customers, to develop a fund, an investment fund, which we're putting together with a few customers that we have launched recently in Dubai. That fund is going to develop with more investors, and it's going to be geared towards investing into the sustainable aviation space. So it's all driving that whole ecosystem. Everybody needs to take a share. Everybody needs to participate in different ways. But we think we have to have a leading role in the space. We developed our vision during the pandemic by announcing our project for 2035. It was a bold move for Airbus while we were going through the middle of the crisis. But we clearly need to drive that together with our suppliers, our partners in the space, and it's clearly become a subject that everybody's mentioning. But now we need to take action, and we are doing things right now in Airbus to take action. And you will see those actions, come together in the next few years, and some of them even next year. So very, very busy on that space. We're organizing ourselves within Airbus as well to tackle this very proactively, whether it's research and development, but also in many other areas. So a question I could talk about for a half an hour, but it's a very interesting one.
Yeah, to pick up on one thread around it, what could be the accelerants or positive things that could happen to move things forward faster? So obviously it's a global issue. There are challenges that are there. Do you feel there is enough? So governments will bellyache about it. They'll make broad plans, but do you feel there's real levels of support at a central government level around pushing innovation in the space? As you say, that'll be innovation both from the likes of OEMs and how they develop new technologies, and then real push around making SAF something that is mass producible in an economic way, both for the producer and both for the airline as the ultimate end user.
Yeah, you could also debate and say the governments are not doing enough, but they're doing far more than they were a year or two ago. So I think it's the level of consciousness within the political sphere has grown significantly. It's grown very much in the EU. It's grown with the new US administration. Obviously, nothing in comparison to the previous one when it comes to the environment. So we're really seeing that very strong dynamic. We see it in Europe and coming in the US. We haven't seen it as much yet in other economies like China, but we do, at least not in aviation, but we do think this will also come. And we do see it from the investors. All the investors we talk to, the investors in the aviation space, when they are raising money in the capital markets, are being asked questions, and there are a number of new criteria being looked at. So there's a lot more, everybody's looking at those parameters and seeing how to measure progress. So the whole dynamic is just starting to pick up, I feel. There's a lot more to do, and the governments clearly play a role, and you will see obviously different policies, and some are good, some are bad, some are tax driven, some are incentive driven. So you can argue what's the right way to do it, but there will be different approaches. But we really see across the board now a lot more action being taken in this area. So it's all going in a positive direction, and it makes our industry, again, very exciting, because we will need a lot of disruptive technologies to, get into or meet our ambition, and especially when we look at 2050. So it's very interesting, and I think it's going to be it's not a topic that is going to go away. It's something that we need really to get ahead of the curve on. So we really have taken this very seriously within Airbus, and we're overhauling our whole company and our company culture around it. So a lot of action is being taken by a CEO on this front.
And just in closing, Paul, can I ask you, as you come out of probably the hardest year and a half, nearly 2 years that maybe aviation has ever faced, as you look out into 2022, what are your optimism levels? As you think about the aviation wider sector and Airbus, your own business, how optimistic or otherwise are you looking out over the next 12 months?
I'm super optimistic, and even more so since I've traveled the last 2 months, going abroad, going to the east, traveling across the Atlantic a few times. I've seen people traveling and going back in the air as soon as they can. They book travel. They want to get out there. They want to meet customers. They see the limits of doing video conferencing. It's a great tool, as we're doing today, but this is not how we drive our business. So I'm very optimistic. I see, even though we have Omicron today and it's creating a setback in some of our economies, it's going to create probably a dip in the traffic again. I think we're very reactive. We need obviously to get vaccination expanded globally to all the economies, whether rich or poor or developing. I think once we master that vaccination on a more global scale, I'm very optimistic this can happen during 2022, and we see a global recovery. Now we're seeing a very contrasted recovery, but we do see extremely strong recovery when things get under control with respect to the pandemic. So I think this creates a message of optimism for economies that are still suffering very much from the pandemic. that things will clearly recover. I think the governments need to be more pragmatic also, and rather than being conservative and say we're closing borders tomorrow because we're afraid of this and that, they need to take a step back and really think about other measures than closing borders, because we've seen that closing borders with availability of vaccination is not the solution. So we always have concerns. There's waves of pandemic coming back. There's variants that unfortunately are every time creates uncertainty, but I'm very optimistic for 22, and I see a very, very strong recovery globally during the course of 2022.
Paul, I'd like to thank you for your time and insights today, and wish both you and Airbus the very best of success over the following 12 months. Thanks again.
Thank you, Joe.